watching Stockwatch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Nader from Benguela Global Fund Managers and David Shapiro from Sasfin Securities. Be sure to send your questions through via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents, and really appreciate you, David, for coming through from the land of Trump. So we could just do the show with you, Grant. You can take a break. No, I'm kidding.
Bye.
David, it's quite interesting because we've seen such a huge rally on the JSE and in the European stocks, which we saw last night in the US stocks, but the US stocks have significantly pulled back. What is it? Because I would think that this is good news.
Well, it's good news that he paused.
Yeah.
And although he says this is part of his strategy, I think there was enormous pressure on him to pause. And what really drove it, I know it's attributed to Jamie Dimon and Bill Ackman putting pressure on him. If you followed their tweets or you followed their messaging, they felt it was madness, and this was going to take the US into a recession and, of course, cause a lot of damage. What happened, what swayed it, was that the bond market started to tilt. In other words, people started to withdraw from the bond market. Even if you look today, Zanati, and it's important because people are getting out of US assets. So if you look at the 30-year bond and the 10-year bond, they're weakening still as we talk now. At the low end of the market, the 2-year and short end of the market, things are improving there. But what it does show you and what it exposes, how nervous people are, in trying to just summarize it briefly, these signs just show it's not the equity market's one thing, but when the bond market starts to behave that way, then it starts to cause a lot of worry. It means, and you've seen it in the gold price, money going back into gold, it's over 3,100 again. So I think that caused what Trump said yesterday, the yips, which is a golfing term where, you keep shanking or you keep whatever you're doing, not hitting straight. So, he said, people have got the yips, which means, anyway. So I think that sums it up. There's still enormous concerns about where the U.S. economy is going and also its relationship with, with its trading partners, particularly China.
Yeah.
China tariffs are now 145%.
I was wondering what that was about when he said that people are all yippee, and I was like, what is he saying? So thank you for clarifying that for us, David. Grant, is this a pullback that we are seeing in the U.S. markets and this flight from U.S. bonds as well? Is that because of the damage that's already been done that can't easily be reversed, or just uncertainty about the future?
I think it's a combination of those. So the extremes in volatility, the VIX was over 50, even bond volatility was very high. And that the view is that it was forcing unwinds of positions. So there are a lot of leveraged bets out there, especially in the treasury market. And when that type of move happens, those sharp moves in size, in the biggest, most liquid market of any asset in the world, it's generally a sign of distress. And that systemic risk that David was alluding to is something you need to be concerned about and pay attention to. And so I think it was partially a consequence of all this other, of what's happening, really.
Yeah.
So people are getting squeezed and getting caught in the wrong side of the trade.
Yeah.
I don't think we've seen the China dumping treasuries yet. That's something that they hold up their sleeve. But that could be the next thing that one has to watch out for.
Yeah, well, oil has been on the wrong side of trade as well with recession worries. But actually today we saw double-digit increase in Sasol's share price. But obviously that means nothing considering all the pressure that we've seen on Sasol. There's a question here. If there are any investment index or funds that track the oil price, firstly, the question is, would you be looking at those at the moment, David?
Me? No. No. And I think you can say goodbye to drill, baby, drill. If you've watched Trump, remember that he rejected anything that had to do with electric vehicles. So America's got so much oil, we can drill drilled baby drill. You've heard that expression often.
Yeah.
But with WTI, which is the American version of oil or fuel, is at below 60. There's no ways that the Permian Basin or any of these places are going to drill.
Yeah.
If anything, they're going to just kind of close up their wells and retreat. So what's happening now in a slower growth world and concerns about relationships. I think, oil listen, it's great for us, especially with the rand at 1950. At least it gives us a little bit of a break on petrol prices. But I'm still very concerned that the signs that there's just too much stress to go and take a bet like that at the moment. It's somewhere down the line in a few years' time, you might be right, but you don't have to, bet at this level. It's much too difficult, much too volatile to make those kind of bets now.
Yeah. I mean, if you are betting on oil at any point, Grant, as the viewer's asking for any investment funds that track oil, would you actually be looking at those, or maybe some of the companies that are exposed to oil?
Yeah, I think the simplest bet if you've got an overseas account is the XLE, which is the energy ETF. In terms of SA, there used to be an oil ETN, which was basically the rand oil price that you could buy. I don't know if that's still on the JC. It might well be. That would be a simple way to trade that. I mean, I think I agree with David, but it also was somewhat of a coordinated sell-off. So the Saudis came in, announced a significant increase in production the same day the tariffs were announced, and that triggered the sell-off in oil. So this is kind of an artificial sell-off to begin with, and then obviously as the recession fears grow, all bets are off. But if the world avoids a recession, $60 oil is very much the low end of where you should expect to see it in a something of a growth environment. So I don't think it's a bad. And remember, it's also a political risk hedge as well. If the Middle East is still simmering, there are global geopolitics, etc., and oil is often at the center of a lot of that. So a small allocation in the portfolio as a kind of a risk hedge, political risk hedge. It's not a bad idea. I mean, I think I'd start looking at it below 60 for the first time in a long time.
Okay. Well, you spoke about it. Yeah, David.
The Saudis and Trump are NBFs. Best friends, hey?
Yeah, until they're not.
He's off going there, and he's got they're sponsoring golf tournaments at all his golf courses down there. So
True.
just watch the fact they brought it down.
That's what a lot of other countries thought too, David. We'll see.
Interesting. Interesting relationship dynamics that we're seeing there. Grant spoke about an oil ETN, and actually there's a viewer that's asking about an ETN on ASML and for Berkshire at FNB. Would they be good buys? Let's start off with ASML. I think, David, this has been a firm favorite of yours in the last while. Do you still share that optimism?
I think if you've got a view down the line, I don't think that technology is going to be impacted anywhere close to a lot of the other trading areas. There's still going to be an ongoing demand for semiconductors, and they make the right kinds of machines that produce these very sophisticated semiconductors. The problem is it's been caught in all kinds of political battles. It's in Europe, it's in the Netherlands. They've come under pressure. There's been huge kind of spats between America and Europe. There's the concerns about the exports of highly sophisticated semiconductors to China. So all of that is playing on the company. In the meantime, the company puts its head down and continues to do what it does best, and produce these very good machines. So I think if you've got the courage to look through all of this noise at the moment, it's still an exceptionally good business that is pivotal in the development of artificial intelligence and other technological developments. So, I still like it, but you're going to get these kind of share prices being tossed all over the place,
Yeah.
It's not a reflection of the business. It's just a reflection of emotion and the political turmoil that we're going through at the moment.
So you need guts of steel, but really maybe one that you can just buy and just close your eyes. Would you say the same thing, Grant, or different?
Definitely. Definitely. I can't speak for the timing, but it's a great business. It's selling cheap. And if you have a 3, 4, 5 year view that AI will remain that chip, the next Blackwell, the next Rubin, NVIDIA's cutting edge chips can't happen without this company. Yeah, it's a very good business. It's almost a monopoly.
Okay.
I agree with David. I would buy it.
Okay. What about an ETN on Berkshire, David?
I've been a long time follower of him, and I must admit I criticized him when he sold out everything for cash. Whether he had any foresight or whether there was another strategy around it, no one will ever know. No one knows. It's held up very well. It's one of the few American businesses at the moment, or it's still a top 10 US business. I'm talking about in the S&P. And things have gone right for him. He's got the cash. On the other hand, the business that he's owned are going to feel the pinch or stress of a downturn in the U.S. economy. So you covered, first of all, his portfolio is one thing. On the other hand, he's got this mammoth amount of cash. But I think from this point of view, it's probably a fairly decent bet, considering the 350 odd billion of cash that he's got. I think it might even be more. I've lost track of how much cash he has.
Yeah.
So his total market cap is probably double that, but I mean, half of it's in cash.
Yeah.
So you're not taking much of a risk.
Grant, if I'm correct, I think you've placed your bets on this one before, have you not?
Can't remember if I've placed my bets on it, but I like it. I think it's phenomenal. At the tender age of 94, he's still rocking. I mean, he's raised cash over the last 6, 9 months. And I mean, almost like he had a crystal ball. He's done it time and time again over 50 years. Just brilliant. And I take my hat off to him. It's a great business. There's also a real business there. There's a lot of businesses, and it's got a lot of good investments. Apple, the biggest, is vulnerable at this point in time. But as David said, there's so much cash, and there's a lot of other good insurance and reinsurance businesses there. It's a cash machine. It's a great business. You're not getting it cheap, but it never goes cheap.
Yeah, David?
But it's also very focused inwardly. It's focused on I mean, it's got Burlington Northern Santa Fe, which is a chuk-chuk company. It's a freight company.
Yeah.
So there's no tariffs there.
Okay.
It might suffer because it carries goods, on which tariffs are, and trade might come down. But I mean, directly, it's not really impacted. If you go through most of these businesses, they pretty much are local. Although I have to pull back and say we don't know how tariffs is going to affect the broader America, and even those businesses can come under pressure.
Okay. Let's get into more questions. How does the balance sheet of Sibanye look? I know that the resources have actually done very, very well. Today they're up more than 8%, and I'm sure Sibanye has participated in that rally. But talking about the balance sheet, where it's actually been touted as the one with the weakest in that mining and PGM sector, Grant.
Yeah, definitely. As far as balance sheets go, it's the one we're most concerned about. So I think you need to be careful there. In order to manage that balance sheet, they made a number of acquisitions, probably at the wrong time. As we've gone down into this trough in prices, they obviously the revenue's fallen. They've had to sell forward some of their production, into streaming deals, to secure some cash to manage this balance sheet and this debt. So definitely the weaker of the balance sheets. Of course, that also makes them more geared to the upside and the downside. So if you did see a proper recovery in PGMs, you'll probably see this one outperform. But your risk is a lot greater, in my opinion, in terms of survivability if PGMs don't recover or continue to grind lower and sideways. So be a little bit careful there. Of course, the gold kicker is a benefit to them. That might save the day. They do hold some DRD, but some of their old shafts are still being closed. They're not that profitable. So, it's a tough one to convince me on, to be honest.
Yeah, well, it's up almost 11% on the day today. And I'm wondering, David, are there more bets being placed on the PGM sector actually, yeah, recovering and going to the upside and yeah, having bottomed. I also saw that Teresa actually came out to the production report today, and they actually reported on higher PGM prices.
Yeah, higher PGM prices. The thing is, I always take a guidance from the charts. You know, I'm not a technical analyst, but I like to look at where the charts are. And whenever I look at those PGMs or platinum businesses, the charts still go from the top left hand to the bottom right. And even now, as you were talking, I said, let me go have a look at Sibanye. And it hasn't broken out of that downtrend. I still think there's a lot of issues in that area.
Yeah.
There's a lot that one has to push through. Your platinum price, I know rhodium has picked up on that, but your platinum palladium prices are still under 1,000. It makes it very difficult for them. The rand at these levels is a spike, just gives them a little bit of respite. But I mean, demand as well. We thought that demand would come back as Trump turned away from EVs. But I think generally energy businesses are I'm saying generally oil's under pressure, PGMs are under pressure. There's nothing to attract you. Unless if you're a trader and you like to play the bottoms, yes, you'll always find something to go into. But I think over time it's turning out to be such a battle to get this right.
Yeah.
Just, I know we love to trade our whole life in South Africa. From the time that gold was discovered in 1886, we've been commodity traders or resource traders, talking shares. And that's part of our DNA, but it's tough. It's tough to make a long-term call.
Okay, all right. Well, let's get into the automotive sector, but not an OEM, Zeda. Your view on Zeda, does car rental offer an opportunity to hide from tariff volatility? This is an interesting one, Grant.
So just to confirm, is this Zeda the car?
Yes, yeah,
auto?
not what agriculture, yeah, the car company.
Yeah. Okay, so the question is, does it give them a chance to hide from tariffs?
Yeah. Yeah.
Have to buy cars.
I'm not sure if they can hide from tariffs. I think the auto sector is going to be hard hit by tariffs, and and I think there's other issues around the Chinese, flooding into SA, cheap car sales into SA. So I would look at how they're positioned in that space. Obviously they have a rental fleet that's quite dependent on tourism and business travel, so that's one element. It is a cheap company. It's cyclical, probably trading on 4 times earnings, I think. But you need to have a slightly better view or constructive view on the outlook for SA as a whole. And right now, our tariff positioning against Trump isn't great. He doesn't love us. There seems to be a real, we have a niche, a pet hate in his life, I think, around SA, and that's a bit of a concern for me. So I'm quite concerned about that.
Yeah, it's interesting because, I mean, it feels like although they might not be directly impacted by tariffs, but there's an indirect effect there looking at the fact that there's a threat to global growth. David, what would you say about investing in Zeda during these times?
On the tourist side, I would imagine there's going to be a lot of internal tourism. And South Africa is still a cheap destination. One thing is that people are not traveling to the US. I think if you go there, it's one of the themes that's very interesting.
Except for you.
I come see family. That's why I'm here.
Yeah.
But one of the themes, the interesting, Grant, is that their biggest international tourists come from Canada. I'm talking at a vast distance above anybody else. The numbers are significantly greater than the Germans and the French, than anybody, and they're not coming. The airline bookings are down 70% through to September. It came through in the CPI. If you look at the PCE indicators that came out today, you'll see that hotel bookings are down and other kind of things. So
even flights,
but from South Africa's point of view, I think we're not in that category. But I think hopefully people will start looking at cheap destinations and make their headway here. But they're certainly not going to the US from Europe. So we might capture a bit of that. That's wishful thinking.
Yeah, it's interesting.
It's not a bad point, David. I mean, America's making frenemies all over the show.
Yeah.
Frenemies.
The Europeans are not coming. Certainly the Canadians are not coming. I'm not sure that
Yeah.
the Mexicans are that happy about America
Yeah.
either. But
They used to
take
be
that seriously.
besties.
These are big numbers. These are not.
Yeah.
This is not play numbers. And
Yeah.
for here in America, you've got Broadway, you've got the restaurants, you've got the hotels, Empire State Building,
Yeah.
Statue of Liberty. They rely on those tourists, and the Canadians are just saying
Yeah.
no. We're
Yeah.
not coming.
That's the
Okay.
problem. Even if they do a tariff deal and everyone sort of says, okay, now we're back to where we were, there's a lot of damage that's done. And
Yeah.
it's
In
you can't
relationships.
undo, you can't bring the trust back. You know,
Yeah.
it's gone.
All right. No,
You
I,
can't say you've been ripping us off, you've been plundering
Yeah.
us, you've been
And they say,
raping us, and then
Yeah.
please come and do
and
it.
then yeah,
Yeah.
yeah. No, I hear that. I hear that. Well, talking about tourism, there's a question on Southern Sun. They disclosed a great trading statement and are trading on a great PE. Maybe a grant, as David was talking about inward tourism. Maybe Southern Sun benefiting from that.
Yes, definitely they have benefited. They've got a nice little portfolio. They've been the best performing of these, holiday or leisure companies in the last year in SA.
Yeah.
And they are, I mean, they've got a nice portfolio, and South Africans are traveling. The things have been improving. Okay, we know things are wobbling a little bit now.
Yeah.
But over the past year to 18 months, especially post elections, things have been a lot better, and people are feeling better. There was an improvement in sentiment and spending. That may not stay the case, but it certainly they've done well to tap that, and obviously still benefit from overseas travel to Cape Town and the Eastern Cape and Natal.
Okay. David, your thoughts on Southern Sun?
No, I agree with Grant. I think that when those big boats, those magnificent, huge things, when they dock in Cape Town, thousands of people get off. Those are very popular. But it's Cape Town is a magnificent destination. But I think most of our coastal resorts are. I don't know about Joburg, whether we're still collecting. People are still coming. But I think from a beauty point of view, it still makes all the magazines. It's still one of the top-rated global tourist attractions. And I think from that point of view, they're well placed.
All right.
Sports betting, another
Yeah.
area. So
All right.
Mm.
Well,
as
talking
long as we
about
got the money to do that.
Yeah.
talking about attractions, what are you attracted to today, Grant? Your stock pick.
So I'm attracted to Boxer because I think we're in an environment where you're going to find companies that are struggling to grow in general. The economy is going to struggle to grow a little bit. Inflation is likely to come back, or at least it's not going away with tariffs and all these other concerns and the rand blowing out. And so you want something that's defensive but can still grow, and that's Boxer. The food retailers can pass on price increases. People have to eat no matter what inflation is. They'll give up another fancy leather jacket or a pair of Italian shoes, but they can't give up eating.
Yeah.
So the retailers are defensive in that sense, and they can pass on inflation, so they give you a bit of a hedge, and they can still grow because Boxer's got a lovely rollout strategy of a lot of stores. They haven't even nearly finished their rollout in terms of their plan over the next 5 years. So it's a nice little upside growth opportunity, and it's a defensive bias to it as well. So I like it.
All right. You talk about people not giving up eating. I don't know. Hey, sometimes I buy clothes instead of eating. I weigh my calories instead of eating them.
Oh dear.
David, what's your stock pick for today?
You'd eat the clothes.
I was going to say cash. Because I'm quite punch drunk at the moment and that. But just taking Grant's theme further into the US markets, you've got Costco and Walmart here who are making an incredible effort to face the challenges. And Walmart gets in a lot of goods from China, but still, they're a kind of business that will tailor themselves for the consumer to make sure that they maintain their market share. I love Costco as well. Two of the very similar businesses, and both businesses have got a lot of home. What do you call them? Home products. Not what's the word I'm looking for?
Local.
Not local, but not brands.
No, private label.
Private label, yes.
Private labels. Private labels. There you are. Sorry. Bit offbeat today. Pumped out.
Well, thank you so much for your time and for your analysis today, gents. Really, really appreciate it. That is all for Stockwatch today. Thanks to our guests, Nader from Benguela Global Fund Managers and David Shapiro from Sasfin Securities. Up next, The Close. Stay watching.